Good morning. It's Wednesday, February 19th, about 6 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's get you ready here for the trading day ahead. Let's look at the precious metals and the commodity markets. So looking at the precious metals, you do have green across the screen here. Gold and silver, they are both higher, with gold futures looking to attack those all-time highs. The industrial metals here, they are all also turning a page here after this big sell-off we've seen, especially on copper, 2 big days down, platinum, 2 big days down, as well as palladium. So was that the bottom in copper, platinum, and palladium? Let's see how this day unfolds here. So the overnight price ranges in the precious metals and the key levels. So April gold, high in the overnight session, 29.6410. The all-time record high here on the futures contract, 29.6850. So it feels like a self-fulfilling prophecy at the moment, although don't include feelings in your commodity trading. The low here, 29.4230. That is going to be about a $20 range, $25 range, which corresponds with what the average true range has been. It's actually poked up to about $35, $40 since that big $50 sell-off. Now, yesterday, it retraced that big sell-off, so it tells you that Friday, it was that arb trading that brought the futures contracts together back with the physical, as you did see that the physical futures contract, the physical spot, was trading higher than the forward futures contracts, which is rarely seen, especially in the metals, because of the fact that you have interest and you do also have storage fees that are associated with it. So that's a unusual situation that you see. You generally only see that when you do have squeezes going on in a lot of the metals markets. Now, March silver, 33.63 is going to be the high overnight. The low, 33.13. So about a 50-cent range here. So some critical levels getting back to the gold market. I think now 2,900 is kind of that psychological level, 28.85 below that. So people are going to most likely raise their stop losses and bring those up to just right around that $2,900 level. That's what I believe that the public will end up doing. March silver, you're going to see them raise those stops as well. And I did outline on Saturday for you that if we got that breakout over that 33, kind of 18 to 21 range, that I do anticipate a lot of people are going to re-enter that market looking for it to retrace this candle back up to about that 34.25. Remember, I told you that a lot of these markets, especially on silver, should capitulate overnight on Sunday night going into Monday morning, which is what we saw because of the fact that you had a lot of people chase that market up by that breakout to the upside. And then as the day unfolded, we saw futures sell off on Friday, leaving them in an uncomfortable position. And with banks unopened on Monday here because of that President's Day holiday, that most likely the margin clerks would end up taking them out of the market. So looking at the gold silver ratio, we do have it back at about 88 to 1. So last Thursday we're at 90 to 1, then you go to Friday 86 to 1, and then now Monday, Tuesday, Wednesday about 88 to 1. So gold and silver, they're kind of rising incrementally together. Now getting back to the big headline, the big story surrounding the gold market, Goldman Sachs, they did increase their price target $3,100 here on central bank demand. They did come out with a piece. I discussed this piece. This was many months ago. That was gold for gold. It was a trading recommendation citing significant long-term hedging value in gold because of the trade tensions and things going on in the markets. They came out with a $3,100 price target, and they're also saying that, it's the central bank inflows, it's the ETF flows that come into the market. So if we do see a small 1% increase in demand, especially in the ETFs here with this breakout in the market, you could see a big pickup in that gold market pushing up to about $3,300. And you do have central banks. So they're averaging about 50 tons a month here, but it was really that December where we saw a shoot up here with China and a number of different central banks out there adding about 108 tons here into that market. So you have crude oil futures shifting gears here, because that's one that's going to be on my radar here today. We've had oil prices, they shot up on that Mideast tensions where President Donald Trump said he was going to go full force on Iran here, and then things seemed to back off as there was a lot of discussions about the Ukraine-Russia war ending and things like that. So prices had worked their way down. Well, now we're starting to come back up here because of the fact that, remember, OPEC one of the main suppliers of crude oil futures, or I'm sorry, crude oil just out there for supply, that they are looking to postpone their supply increases here. So we're seeing crude oil up about 72 cents. Yesterday it was up about $1 here, and we're about 72.52 on the April contract. It's been in about a $3 range here for quite a while, so it'd be nice to see this breakout back to the upside, and prices might be able to retrace back up to about $75. Now, overnight, President Trump, before that, we saw the S&P. It hit an all-time high. It was a late day advance here, and it was driven by the chip makers in the hopes of the end of the Ukraine-Russia war. But if you look at overnight price action, we do have equities under a bit of pressure here, as President Trump said he would likely impose tariffs on automobiles, semiconductors, and pharmaceuticals of around 25%. He said a minimum of 25%, with that announcement coming as soon as April 2nd. So what I'm going to be watching here today, it's going to be the Fed minutes, because remember, the energy data will be delayed one day due to the President's Day holiday. So you got any questions, give me a call. I'm going to be a little bit more displaced. I got family in town because of the fact we had an announcement that we were going to have another child here. So can't get away from these Pearl Jams. I got another Pearl Jam poster up here. So the whole house decorated with Pearl Jam stuff. It's one of my favorite bands. So you guys got any questions, again, give us a call here. Be sure to go to info@bluelinefutures.com. Send them an email with anything you need. And then remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck. Good trading.